Hi, I just wanted to talk to you for a couple of minutes. I'm Seth David, by the way, from Nerd Enterprises Incorporated, and I wanted to talk to you for a couple of minutes about cash flow projections. If you follow along with me on the web, then you may have noticed a couple months ago I did a webinar on how to do cash flow projections. And the reason I did it was because I know that there's a good need for people to learn how to do this, especially CPAs and bookkeepers. But I even have had, I've been surprised by the fact that I've had some business owners who weren't necessarily skilled in accounting, but who came in, downloaded the cash flow projections webinar, the recording, I should say, and one of them actually sent his to me so that I could review it, and I was very impressed with what he was able to do given what he learned from my webinar. And here's the thing, it was funny, I laughed when I was doing my email campaign, letting people know that I was doing this, and I've got a series of videos in my blog here that lead up to it. In fact, if you come down here to the subcategories, you can scroll all the way down in my blog, and you'll see there's a section called Events. Where is it? There it is. Events. You'll see Nerds Cash Flow Projections. There are six posts here, which essentially were designed to prepare people for the webinar. And they're all free, and they go over different aspects of the financial statements. I strongly encourage you, especially since it's free, to spend the time reviewing. Each one of these has a video that goes through some aspect of the balance sheet. Starting at the bottom here, this is the first one, and working your way up to analyzing the statement of cash flows. And before that, understanding the statement of cash flows. A lot of people don't really understand it. And in my years of working as an accounting professional, I've run across many bookkeepers who, I've asked them, can you do cash flow projections? And they tell me yes. And when I say, okay, show me, let's do an example. And what I end up getting is sort of a very simple check register projection. They're just looking at the bank account and showing me, here are the checks that need to be written, here are the deposits we know are coming in the next week or two, and add in the deposits, subtract the checks. And that's not a cash flow projection. It leaves so much out of the picture that's so important. So ultimately, when you download my class on cash flow projections, you're going to learn how to create this very document that I've just pulled up for you here. And what is this? Right now, you're looking at an actual statement of cash flows projected, so that at the end of the day, I can tell my client out here in December of 2016, assuming things go according to plan, this is what you'll have in the bank at the end of the time period. But what this does, that a check register projection doesn't do, is it takes into account the entire financial picture. We're projecting the profit and loss statement, and that's easy enough. We project our income and expenses, and then we project the balance sheet. And the balance sheet is the critical piece that ends up sort of being missed, especially when you're just projecting a check register, because projecting a check register doesn't generally take into account things like loan payoffs, the amortization of a prepaid, that sort of thing. And then when this is done, it's not just that you have this projection. First of all, as you can see, if you look, you'll recognize the way the accounts are set up. This is modeled right after a QuickBooks chart of accounts. And then at the end of the day, you have a tool here, because first of all, every month I can update this. I can run my variance report. Here's the example of the variance report we did in the webinar, and I show you how to create this. And then I can add in schedules. I can do a payroll example here that says, okay, let's put in another employee with salaries of $5,000 a month, right? And then I can expand these columns, and it picks up the applicable taxes and health insurance, and this all flows over to the P&L. So this will flow back over to the profit and loss and increase the salaries in the projected portion that need to get paid. Now I just have to find them. So you'll see the salaries go up. Here's wages, and here's office staff. Jumps up from 432 to, we added in the 5,000 a month there. So you can see that it really does work. I'm not just making it up. We look at a line of credit. Let's say we owed $46,000 going into November of 2015, and we know we can afford to pay $2,500 a month to get that line of credit paid down. You just saw, as quickly as I could enter the number, the schedule updates, and then the interest flows to the profit and loss, and the repayment of principal flows properly to the balance sheet. So this takes the entire picture into account. It's not limited to just a small little carve out of the bigger picture. I even showed you how to do a schedule that shows what we're going to draw out in shareholder distributions, so we can have planned distributions, and you can adjust these amounts based on cash flow, because then I can go back to my statement of cash flows and say, oh look, I have a lot less money in the bank now that I just put that $5,000 a month salary in there. I'm going to have a lot less money at the end of the period. So maybe we cut back on the distributions now that I've added in the salary. Maybe I take the distributions down by $5,000, so it's $6,800 a month. So now I can go back to my statement of cash flows and see, oh good, now we're back. I've adjusted for that. So you have the predictability that this offers you in terms of understanding what's going to happen with your business. Of course, we know that actual results of operations are going to vary, sometimes substantially from this, but the idea of this is to give you a guide and then to do the monthly variance report so that you have a constant measure of how close are we, and if we're way off, we make the appropriate adjustments so that ultimately, at the end of the day, we are as close as we can possibly be. But most importantly, doing this on a monthly basis, revisiting it every month, doing the variances and seeing where we're off, it forces you to review your P&L and your balance sheet line by line to make sure that everything looks right, to make sure that everything is there that should be, and so on. And it really forces you to manage your business the way a business should be managed. It's a financial creature, and so it should be managed from a financial standpoint. And doing this gives you the predictability and the know-how to figure out what needs to be done differently, if anything. Or, for that matter, it'll give you the peace of mind that comes with knowing now that I've done this and I've seen that I'm on track, now I can go out and really focus on building the business, growing the client base, building sales up, so that I can make this picture look better and better and better each and every month. If you have any questions, please give me a call at 866-945-8070. If you don't want to be bothered learning how to do this, just call me. I can work with you on a consulting basis to get this done for you. Or visit my knowledge center at nerdenterprises.com/knowledge and download this today. Go in here, click on Nerd's Cash Flow Projections, and click on Order Now, and you can be literally off and running in minutes watching a 3-hour workshop that I did that walks you through step by step how to start off in QuickBooks, run the reports, export them to Excel, format them, write the formulas, and get this whole document put together. Piece by piece, it walks you through. The playback has a timeline. You can pause and resume as much as you need, so you really can take your time learning this at your own pace. Or just give me a call. Again, it's 866-945-8070. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.